Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today was an exciting day. We had USDA report. We had a major positive movement in the trade war between the US and China. So let's get into what was happening in pricing today. We saw canola actually finish a buck and a half lower at 710.60 today, although there was a bit of a different result in the November. We'll get into that closer to the end of this video. So you want to stay tuned right to the end of the video here. Minneapolis wheat down 9.5 cents to 584. That makes a new low. Kansas City wheat down 9.5 to 508. That makes a new low. Chicago wheat down 6.5 to 515.25. That also makes a new low. Soybeans are actually up 19.5 cents at 1071 and a quarter to end the day off. Corn ended up down a buck 75, or sorry, 175 to 448. Although there was also a bit of a different result in the December or the new crop position in there as well. The Canadian dollar has now sunk back down to about 71.5 cents. The US dollar is gaining strength as the trade deals start coming in. Live cattle was up 215 today at 211.60, and feeders were up 6 and change today at 306.38. So still a shortage performance in the cattle markets. All right, let's get into the USDA report today. I'm going to start with soybeans, and we'll start with the changes to the 2024 balance sheet. I'm getting my trusty laser pointer out here. We saw an increase of exports on the 2024 balance sheet here to 2420. That was an increase of about 25 million bushels. Exports here, 1.85 million. That was an increase of about 25 million bushels. This reduced the ending stocks to 350. So they're 375 last month, down to 350 remain this month. As we move into this is the first report, of course, for the 2025-26 crop year. The USDA, kept acres at 83.5, which was the March intentions number. Some standard kind of harvested acre percentage off of that. Yield came in a trend line 52.5, although this is kind of where the USDA starts from. We tend to see reductions in yield over time as well, and that puts production at 4.34 billion bushels, which is actually lower than last year. And that's because of the acreage cut mainly. So even, with the yield increase that they have, we're already lower than last year. And when you kind of work all this math out here, ending stocks are now projected to be below 300,000 or 300 million bushels. So it's getting to be a tighter situation, even though the USDA has put in trendline yield at 52.5. So my own bias here would be that there would be a downward revisions as we move throughout the year. Not to say that there's crop issues or anything, but usually the USDA starts high and works their way back down to something a little bit more realistic. The chart today reflected some of these more bullish fundamentals. I would say soybeans were the most bullish of the bunch here. We saw it kind of pop above previous highs and kind of outside of where it was kind of coiling up here in that 1060 to 1065 area. It traded up to 1071, closed closer to the highs of where we were for the day. There is, of course, some major resistance up here near the top of the trading range. That's about $11, but there is some minor resistance that might play in here just a little bit lower at about 1080 levels. So those are both areas that we are watching now as soybeans, might tend to drift higher here, or the bias would be for higher. Looking at, some global soybeans, global soybean production is expected to hit another record at 426.8 million tons. As you can see, this chart just shows kind of gradual growth year over year. This is the last 15 years of soybean production, and every year just kind of edges higher and higher. We've seen this pretty consistently since 2021 as well. Now, you have to take this number with a grain of salt. Some of this number is American or South American soybean production. Of course, the trick with the 2025-26 crop is that this South American soybean production estimate is for the crop that gets planted in fall. So, lots of variables that could happen here with South America. South America has a big impact on that final number as well. So, just something to consider when looking at new crop soybean production, both globally and in South America. I think that's why the market tends to focus more on U.S. fundamentals as we move it through this spring season, and more towards South American fundamentals as we get towards the fall period. All right, moving on to corn for the 2025 or 2024 crop year. Crop exports went up here by 50 million bushels to 2.6. Where did my 2.6 right here? Billion bushels. That brought the ending stocks down to 1.4. Now, remember at the same time last year when the USDA released some early projections for this coming crop year, the ending stocks were projected to be over 2 billion bushels as well. And now they've been whittled down. I would say we're getting pretty close to the accurate position here at 1.4. So a significant decline in the expectations for ending stocks. What's interesting is now that we kind of carry this forward into new crop, yes, the USDA is putting kind of a trend line yield in here at 181. We haven't seen that in a while, particularly when you see acres growing. Generally, when you see acres growing, it tends to get planted in more of the fringe areas of the corn planting area. And as a result, that kind of tends to pull the average yield down. So most would probably assume here that the 181 is overstating the production. That brings, using that number, though, we get production at 15.8 billion bushels, which is big. But again, we think there's probably downward revisions to come in the yield category here. Again, the big surprise here was actually the sub 2.0 billion bushels of carryout. I think the market was expecting almost right on, or 2.0 or 2.1 billion bushels was expected. We saw a print of 1.8 billion. That's relatively bullish. Although it was a tricky thing to see in the chart today, we actually finished the day off at a loss. Originally, we did push the nearby higher here to 458 and 3/4 up near the 200-day moving average. But then that faded and we saw it kind of back down south of 450 again, still holding support in that 445 to 450 area. But, July corn, given the, what could have been construed as a bullish report because of that new crop ending stocks, we saw it come in at a loss today. We did see December corn perform a little bit better today. It's at 445 today, and it did hold on to gains. It did move up to test that 200-day moving average and kind of failed and moved back down. So it's, it kind of settled in the middle of the trading range. But December corn definitely performed a little bit better than nearby, likely as a result of those that surprise on the new crop ending stocks number. Now, I'm not going to focus too much on the wheat. Wheat did take it on the chin today. All three wheat classes made new lows today. Here's the Minneapolis wheat, which up until today had kind of been exempt from that perpetual new low pattern that the Kansas and the Chicago had been doing. They had broken to new lows last week already and just kind of kept fading. But Minneapolis was performing a little bit better. Today, the bottom let go and we saw a new low in Minneapolis wheat. Let's take a look at why some of that might have happened. U.S. ending stocks were projected back above 900 million bushels in this report. This chart is represented in millions of tons. It would be 25.1 million tons. But you kind of get the picture here. Hard to make a market rally when we've been seeing ending stocks, climbing over the last 3 years, and we're getting into the top end of where U.S. Ending stocks can be. So I think a lot of pressure here in the wheat as a result of these U.S. fundamentals. All right, before we move on here, I did want to talk about our subscription, our premium subscription. Today, we sent out our hot takes report, which details our opinions and what happened in the USDA report today. We kind of pull it apart a little bit more thoroughly and send that out to our subscribers. This in addition to the weekly report that we sent out on Friday as well. So subscribe to our insights. It's only $99 per month. You can cancel anytime. Go to CanadianAgMarkets.com to subscribe. All right, going to talk a little bit more about wheat before we move into canola, because there is some interesting things in canola here in the USDA report, which isn't necessarily printed in the WASDE report, but when you dig into the data, you can kind of see some of this stuff. So I did kind of want to talk a little bit about wheat as well on a global scale. Year over year, the USDA is expecting Russia to have an increase in wheat production by about 2 million tons. China is set to have an increase in wheat production by about 2 million tons. That is even with the problems that we're seeing in Hunan province, where dryness concerns are taking the top off of the wheat crop there in China. The EU is set to have a huge increase in wheat production, according to the USDA, to the tune of about 14 million tons. So these combined with the US balance sheet, did put pressure on wheat today and is putting pressure on wheat markets as a whole. All right. Canola, or rapeseed, as the US calls it, or more of the globe calls it. I want to kind of talk about canola in the context of the USDA, because the USDA does put out their own estimates for both global and for Canadian. And I think sometimes that's important to watch out for. Global rapeseed production is expected to be at a record high, according to the USDA, at 89.56 million tons. Of course, this doesn't factor in much of the Northern Hemisphere growing season yet. So a lot of this is just kind of, trend line yields and things like that. We haven't even planted all of our canola here in Canada yet. So a lot of this is largely speculation. But overall, the production year over year is set to increase by about 4 million tons, at least at this point in the game. If we look at Canada specifically, or what the USDA is reporting for Canada, what's interesting is not necessarily the 2025 balance or the 2025 production estimate, which is higher. It's 19.5 million tons. The USDA is projecting for our crop in 2025. They still have not adopted Stats Canada's 17.8 million ton production number that we're kind of assuming at this point based on Statistics Canada. Perhaps they know something that our underfunded Statistics Canada doesn't know, but they have been reluctant to lower the production in Canada to match the USDA's number. So whether they know something we don't, or the other way around, the numbers between the USDA and StatsCan are different, and usually we see the USDA adopting our official numbers at some point. At this point, they have not. Crush is expected to rise this year. USDA has Canadian crush at 11.3 million tons next year. They have it at 11 million tons this year. A new crush plant in Regina, of course, is coming online during the next crop year. So this growth continues to be robust, and it is this crush market is currently driving, in my opinion, the Canadian canola market. I mean, you can ebb and flow the price with exports, but really the big demand pull now is in the crush. The crush takes up more of the market than exports does. And at this point, we're probably not going to go back to where exports ever outpace crush again. So this will be the pacemaker. Crush will be the pacemaker of canola in Canada going forward. In the context of pricing charts for canola, I thought I'd show a couple of supporting charts. First, July soybean oil rally today. It's hard for me to see on that monitor. We got up to just under, or we did break above 50 cents a pound today at some point. That would have been one of the highest, trades since late April. It looks like it's trying to push back to those previous highs of about April 28th or so. Originally, I had thought that this was a crude oil play, that it was behaving in line with some crude oil or correlated with crude oil. Crude oil saw a resurgence today. I'm going to get into the trade agreement here in a second. I'm assuming everybody knows about the Chinese-U.S. trade agreement, or at least in theory, the trade agreement that occurred over the weekend, the trade talks that occurred over the weekend that rallied stock markets, crude oil, the US dollar, all that kind of stuff. Crude oil got caught up in that, but it did fade near the end of the day. And I'm just going to go back a click here. I thought July soybean oil was kind of entrenched in that move higher with crude oil. But I did see some rumors about changes to the 45Z regulations, and we may have been seeing some buy the rumor. And I looked all day. I could not find anything that related to it. I did see something on Twitter about some rumors. So I'm just going to leave it at that because there's nothing concrete yet. I haven't seen an official headline, but we may be seeing, the soybean oil kind of diverge from crude oil a little bit today because of some expected biofuel policy changes. So here's, what happened in canola today. All of those things helped rally canola today. We did see a new high in canola today. It traded up to about 724, I think, if I'm remembering correctly, but faded pretty quickly after that. We did close the July canola at a loss today, closing at 710.60. That's still very, very high compared to the recent trading ranges. It's still above the March and the October, November highs. So still bullish. The trend line that we have here is still in place. The 20-day moving average has not even been remotely tested in the last 6 weeks almost. So this market still is technically very bullish, breaking above new highs, making a new high today. Today's fade at the end of the day just kind of shows that there still is a lot of interest in this market, and some balance comes into the market when prices rise and we start seeing some sales. I do think that there was some short speculative positions that were stopped out above at or above 720, but I think there's other sellers that are in the marketplace there too. Some of them could be Canadian farmers as the price rises and we start getting to cash levels that make sense as well. One thing that is different though from in today's canola is that November canola made a new high and sustained that new high. So we still are seeing overall calendar bullishness in the canola contract, and today November was the one that lapped the July. So we might also be seeing a little bit more balance in between the months and continued pricing in of tightness as we move through the summer. So overall, still a positive day for canola, even though we saw the July fade out late or midday, I suppose you could say. I do want to caveat here by saying, anybody who says they know where the top of this market is not being truthful, in my opinion. As we move to new high territory in these markets, it becomes increasingly difficult to try to guess at pivot points. I'm not in the business of guessing highs or lows or pivot points or even day trading or any of those kinds of activities. So I just wanted to caveat that I'm not going to be trying to pick a high in this market. It's going to be very difficult. We may have seen it today. We don't know. Not saying that or anything, but that's just the way it goes. A quick thing on weather here before we get into some of the headlines. We are expected to see some precipitation in the next 7 days here in Western Canada. I think this is going to be very well received for most of us. I know one of our viewers is finished seeding now and is celebrating with their family. There might be others that haven't shared that with me yet, but we're supposed to get some precipitation across much of the prairies, as much as an inch and a half, and in Manitoba, up to 2.5, even 3 inches in some areas, and maybe even more in some areas, depending. So I think the rain events will be well welcomed. I think the rain has been increasing in the last few weather runs as well. So looks like they're adding a few millimeters in over the last couple of weather runs. But anyway, it'll be a good change, and we need the moisture. So, all right, let's move into headlines. Of course, the big headline today was that U.S. and China reached a deal to temporarily slash tariffs. The deal lasts for about 90 days. What is it again? U.S. is changing their tariffs down to 30% from 145. and reducing their reciprocal tariffs as well. Overall, the weekend was very positive. We did expect it to be positive. Um, coming into the weekend, stock markets rallied, as I mentioned earlier. The early grain trade prior to the USDA were rallying as well. So overall, I think this is seen as a positive. Something on for our new crop, or sorry, for our special crops listeners. India's monsoon rains are expected to arrive early on May 27th, which is about 5 days earlier than usual. That marks the earliest arrival in the last 5 years or so, which raises the hopes for bumper harvests of, in this article here, they mentioned rice, corn, and soybeans, but also you'll see advantages for peas, lentils, chickpeas, etc. when you get more days of monsoon rains. So generally, that's not supportive for prices for pulses, but worth mentioning as we move forward for the Indian crop year. China bought some Canadian and Australian wheat. As I mentioned earlier, that the Hunan province of China is experiencing some drought and some heat, and have some concerns over their production. China bought some Canadian and Australian wheat today. The thought was between 400,000 and 500,000 tons of wheat. I think the Canadian share of that is said to have been about 200,000, so about half if they bought 400, and a little less than half if they bought 500,000. So good overall. China did not import much wheat last year because they had a good crop of wheat. But this year, some of the weather concerns, even with the USDA's increase in production, are causing them to shore up their supplies with some imports. All right, that is all we have for you today. Thank you for joining, and we will see you again tomorrow. Have a great day.